The Financial Inclusion Conclave presented by Jana Small Finance Bank, partnered by Times Network, saw a riveting discussion on the role that technology plays in the national mission of achieving complete financial inclusion. On the panel were Krishnamurthy Subramanian, Chief Economic Advisor, Government of India; P.S. Jayakumar, Managing Director and Chief Executive Officer, Bank of Baroda; Jayashree Vyas, Managing Director, Seva Bank; Sudarshan Singh, former Executive Director, Reserve Bank of India; Krishnan Dharmarajan, Executive Director, Centre for Digital Financial Inclusion; Alok Mishra, Professor, Public Policy and Governance Area, Management Development Institute; Ajay Kanwal, Managing Director and Chief Executive Officer, Jana Small Finance Bank. And the panel was moderated by Mihir Bhatt, Chief Editor, IPs, Times Network.
Good evening to all of you, and thank you so much for joining us. Mr. Subramanian, sir, my question is for you. You have been to a lot of states recently to, get a sort of grip on the facts about economy. Today, when you go to hinterland, how much things have changed at the ground level?
When I was young, looking at those, people who are actually elder by, maybe 8 to 10 years, people who had finished their, MComs and MAs and going to the employment exchange to check whether basically there was a job that was there. I remember many of those, people whom we call bhaiya not getting jobs. Today, there are people who actually finish school and can start working. So there's been a sea change in the way in which, opportunities are there.
Ajay, what I want to know from you is, I like the theme of this session that we have, that connecting high street to the last mile. I think somewhere the small finance banking space is actually doing much more than financial inclusion. It's actually getting a lot of people, a very large chunk of Indian population, into the mainstream, the main economy, where they can participate in the growth that India is witnessing. So what are your thoughts when you say that you want to focus on, connecting high street to the last mile?
Three things really. I think first is with both Jaya and I can relate to. We've learned all the foreign banking in our lives, applying it completely to this, the financial inclusion space. And to us, at least I see myself as, began with the high street, but now finally servicing the last mile. And I must tell you, the pleasure of servicing the last mile is far greater than working in the high street. I think we are slowly inculcating formalization of a very informal sector and really bringing them to the main street. I think it's a long journey, but to me, this is the start that we are making.
Now, I cannot move on in this conversation without mentioning the Dhan initiative. It's obviously one of the largest initiative of its kind in the world, and there are record-breaking numbers with almost more than 35 crore accounts, 1 lakh crore of deposit. Are you satisfied, one, with the numbers? And second, a very major part of this 1 lakh crore deposit which has been mobilized in Dhan is also because of the DBT transfer which has happened. But the active accounts, or people who are actively engaging in this formal way of banking, is that ratio satisfactory, or do you expect some improvement? Because that is a very critical indicator of financial inclusion at large.
Let me put the facts straight. It is not one of the largest initiatives. It is the largest initiative ever in the world. And I think that's something which we have to acknowledge. We certainly should be, more ambitious. No question about that. What I would say is that let's first acknowledge the phenomenal job that has happened in bringing a large section of the population, and bringing sort of the financial inclusion to this large section of the population. While the direct benefit transfers, the way you framed the question, I would actually look at that as, I think that's a good thing, that there's a stable float that comes in, and thereby at least encourages transactions, withdrawal transactions. And again, research in financial inclusion shows that when you look at the customer life cycle for someone who actually starts out, let's say, with a very small loan or maybe just starting with a bank account, there is this gradation that happens, and the record, and when you get data on the transactions that happen, right? That data can be put together to assess the ability to pay, the willingness to pay, and thereby migrate some of these customers onto a loan and thereby other financial products as well. So there is enormous opportunity here, especially to disrupt using technology, AI, machine learning, etc.
Mr. Jaikumar, you have been very instrumental in making entire Jan Dhan initiative the success that it is, being one of the largest PSU bankers. What is the customer behavior change that you have seen once these people who were never part of a formal banking channel or system, when they entered, are they more open to this formal way of economy and banking?
Well, I guess it's a process of evolution. In our books, we have about 12% of the Jan Dhan customers bank with us, and that's roughly about 3.6 crores, so thereabout. What I've been finding is that there's much more increased formal banking system that is being developed, but all said and done, a lot more needs to be done. What we also find is, if you were to take agricultural finance as a case in point, wherever customers have have a large number of transactions that go through the bank account, the credit behavior is wonderful. And wherever the transactions are very few, they actually turn out to be quite poor. And then you have all these farm waivers and everything else. And so when you start thinking about that segment and say, how would I make it perform? The only way to do that is to build more banking behavior. And that would mean better savings, better way to manage money, and it in turn will result in much more responsible behavior. So I would put it to you this way, very encouraging, but a lot needs to be done.
Jashi ma'am, I want your view on this. You have actually been almost pioneer in this, starting from cooperative bank that you have been involved with to this day and age. What are your key learnings, and what are the changes which are required from the small finance bank or the rural banking ecosystem and the cooperative banking ecosystem that we presently have, if we really want to push forward the financial inclusion juggernaut?
Type of bank would not matter much. What is your objective and how we are going forward? The first thing, the reason why we started our bank was because informal sector women workers working very hard but had to borrow from money lenders. So first step, and that is how the bank was started. So the first thing which we thought was that, the first credit product which we had started, and we're still running with that, is to help them give back the money to money lender. Majority of them had mortgaged their land and they were not able to get it back. So the second product which we had was that, we give them a loan to repay that for mortgage and get back that mortgage land so that it becomes productive. We saw that basic instinct for women was to save. So then the second thing was that, we facilitated them, and eventually we started a financial literacy program and motivated them. So that was, and now, women have, on their own, are saving regularly. The third thing which we saw was, of course, providing working capital loan for expanding businesses. But we also saw that when they were going up, they were always wanting to buy machines. Say, for example, a carpenter who was doing, work by hand, they would like to have machine. So then when we started giving them machines, what we found was, of course, it was helping them to increase productivity and income, but it was also helping them to reduce drudgery. So then that becomes our criteria for that. And finally, of course, then housing loan, and minority of women workers are home-based workers. So, giving loan for even repairing a house was helping them to increase that productivity. What we have seen that in spite of having all these products, women were not using all products. They were only using credit. They were only interested in credit. So that made us think that what is the reason why this is happening, and we tried to understand financial behavior of those families, and what we found was that they were all living on day-to-day basis, so they were thinking also on day-to-day basis, and linked with that was that there was always an impulsive financial behavior, that I want money, there's a money lender there, I would borrow. And the third, which was linked with that, was for all types of life cycle needs, they were using only one service, and that is credit. They were using, I mean, they were saving, but they were saving only for, rainy days, and that would come very often. So we started a financial literacy program, and I must say that, thanks to Jai Kumar, when he was in Citibank, he had given us that funds. So we started that financial literacy program, and in that we had, I think the first thing which is, of course, that, how to start planning and thinking of planning. But
Right.
savings, power of compounding is something which would help the most.
Mr. Sudarshan, this question is for you. After all the initiatives that government has taken, RBI has taken, banks, this entire flourishing ecosystem of small finance bank or rural banking, the fact is, even today, if we look at the bottom of the pyramid in terms of the economic structure of a country, and it's a very startling data that less than 10% have actual access to formal credit. What's your take on that, and how can we fix this?
I think that's the opportunity. That problem is itself the opportunity that the high street has not really made a great job of reaching the last mile, which is why we brought small finance banks who don't have the high street orientation or the high street ethos to cater to the needs of the last mile. The one area I think we need to think of is technology. Increasingly, I was just thinking of that insurance, how can we make insurance, crop insurance more effective? Just to digress slightly, if we were to digitize land records, number one, digitize acreage under crop, number two, use remote sensing capabilities of satellites to identify what is the amount of crop that needs to be insured, and in case of calamities, assess what is the extent of damage. You could have a very reliable, scientific, seamless, to use a term used today, robotized way of getting the insurance in time to the insured. Similarly, for these people who don't have access to, the bottom of the pyramid, anecdotally, there are villages in the backward tribal regions of India who don't know what a bank is. So I think there is a huge opportunity there for taking people with the mindsets of the small lanes, the understanding of the small lanes, recruiting specifically for that function, and like SFBs do. I think it's a huge opportunity for MFIs and SFBs. Use technology, bring down the costs, and try and educate people more about what is available. You see, one of the ways we can really get to the bottom of the pyramid is improve access of these people in physical terms. What about transportation links? What about communication links? How can they reach a bank branch more easily? You know how much time it takes for some of these people to reach a branch? How much time it takes for the business correspondent to reach them? Number one. Secondly, the fact that many of them face so many frictions in, giving information. A lot of information is available today on economic activity which is not captured. Can we digitize that? So technology, I think, is a great enabler to reaching that bottom of the pyramid in a more efficient way.
Mr. Dharmarajan, you want to add to that?
Technology. This Dhan has happened because of technology, because you were able to use technology for eKYC.
Right.
You could never have done this at this scale. Second, once you have technology, you open the accounts, the important thing is to have activity on those accounts. And there, this entire interoperable payments infrastructure has been laid across the country. That is the basis on which all activity can be driven on these accounts. You create transaction histories of all these people who otherwise are out of it. And then if you can keep them engaged on those platforms, create products for them based on these transaction histories, then you have the game going. Then you have the stickiness. Otherwise, they will go back to cash. So once you have them banking, use digital platforms to see that they keep those transactions going and then create products for this.
Right.
I mean, government has done amazing things. Nowhere in the world you have this cost digital payments anywhere. Even now, when we talk about credit, that is in a parallel line.
Yeah.
Transactions are happening in cash.
Correct.
You have a parallel line of credit. So you today mainly have soft information. You can actually generate this hard information if you leverage this payments infrastructure. And that is key to it. That's why I feel our Honorable PM has been putting so much on digital payments. There are many parts to it. One is to bring a more transparent economy, reduce black money and all that. It's a good spin-off. But the other thing is, as you start doing it, you can really reach out to all these people on the ground and give them loans and stuff like that. 2018-19, last year, 3 lakh crore was the amount of DBT given across the country, close to 50 crore people across the country. So 3 lakh crore has gone into those bank accounts, okay?
Right.
Now, you have created an added problem there of cash out. How are they going to cash out in the rural areas? All those problems about people walking there and how do you business correspondent reach? So if you can actually create a digitally enabled payments environment in rural areas, which is actually more cost effective than cash out,
Right.
you would actually have people transacting digitally, you would have their transaction histories, you'll be able to extend credit. So all that can enter a virtuous cycle. Today, it's somewhere there. Once you enter this cycle, it goes on a different trajectory.
It fixes the leakage problem also to
Absolutely.
create
So many things happen. Once you do something right, you'll find that you'll fix 5 other problems simultaneously.
Exactly.
Today, for example, on the ground, we have a Kisan Sathi platform. We work with SkyMet, and it gives exactly the data on the moisture in the soil, the quantity of production. It gives an index of the outcome of the agricultural activity, right? It connects you to people who are selling seeds or fertilizer or whatever else that is input material. Because of the fintech kind of companies that are there, you can take a tractor on rent, for example, right? You are connected with the supply chain in terms of farm produce. That's one type of technology platforms that are getting built, and we are doing quite a lot of work on that area. The other type of thing that is resulting in what one calls as a non-linear growth is the development of platforms. For example, let me give you a case study of a company in the East that sells plants, bananas, through Telawala gadis with the branding of the sticker of the company on each of the bananas, right? And what we are working with them is to finance the entire supply chain, giving the customer, the Telawala person, what effectively is a morning, evening credit, which hitherto they are accessing at 36% or 34% at practically very low cost. And we may not have the people touch as Kanwal has got, but I do think this technology and the applications of it can result in a very quick non-linear growth that can dramatically change things. So I think we're putting the bet on technology is probably the right thing to do.
Alok, one major catalyst, I would say, for this entire digital revolution that we have witnessed in Indian economy was demonetization. And it actually triggered a chain of events which are irreversible, and we are still actually seeing benefits of that one major step, or I would say outlier shot that we took. What can be a next outlier shot for an economy like India? From observation point of view, what's your take on that?
When you talk about demonetization as the major thrust, I think we forget the building of rails part, which panelists have talked about. Because a significant work in last 5 years, from 2014, 13 to onwards to till demonetization time, was done on building the digital rails. Because just like demonetization on its own would have become a cropper, but the way that the Aadhaar was put in place, eKYC was already there, UPI was developed by NPCI, interoperability was there, banking correspondence there, so it all fitted in. So yes, demonetization was, some people say shock, some economists like Krishnamurthy and I would also call it as a nudge, a little harder nudge, rather I would not say nudge, it was bordering on push. But when you talk about the next way, because I was last evening I was looking at the data of per capita transactions since April on Bheem, UPI, #99, USSD and RuPay, and the highest per capita transaction was in Chandigarh at 28 in this year. And if you go down to south, in Tamil Nadu, which is a developed state, it was still 9, which is low. And I think that there are two things to it. which we can do gradually to go towards a more digital or less cash economy.
Right.
One is the creating of the ecosystem. Because just giving, suppose like microfinance, Ajay gives loans in the customer's bank account. But that is one part of it. But if the customer doesn't have an ecosystem where he or she transacts digitally, and nowadays the QR code, the wonderful technology is available, we need not invest in POS machines, the QR code is there. If that push is taken, I think that solves the ecosystem creation part of it. We still as a country on the ATMs or on POS machines lack a lot of things. That has to be done. And secondly, I think the biggest push will come from formalization of the economy, which will be a gradual process as the economy develops. And the government is already doing its part with this PSB loans, 59 minutes schemes and all that. I think as the formalization grows, as people see, as there are less incentives to high tax and more incentives to be tax compliant, and the sector becomes we have 63 million enterprises, out of which 62 million are micro and small, whose profitability is almost built on tax evasion. Once that goes away, the formalization takes place, and the ecosystem for cash in, cash out is more seamless at ground level. I think that would be the way to go.
I do want to highlight that after demonetization, about 3 lakh shell companies have been actually identified. A couple of other points I think which is, came very well is the emphasis on the digital economy. I think here's where again, we need to sort of nudge to encourage people to do a lot more in digital transactions. Here's where the typical behavior, there's myopia that sets in that, when someone does a lot of transactions in digitally, while he or she may basically end up giving a little bit more, let's say, in tax, but the benefit he or she gets from the trail and therefore the credit history that is created and the ability to use that and get credit and thereby make the business bigger is actually lot higher. The last point in this actually is digital economy really needs data. And that is where I think what we've tried to advocate, data as a public good, the investment that needs to happen. There is a lot of data that sits around actually, whether it's survey data, whether it's actually administrative data across different ministries, or transaction data that comes in, while making sure that all the safeguards for privacy are kept in mind within the legal framework for this. The data can be brought together, and thereby you can get a much more holistic view on a potential borrower, and thereby give them credit, for instance. And especially for small and medium enterprises, working capital is a lifeline. And if basically using this data, if they can be given credit, really that the amount of impact on avoiding distress that can happen is just huge.
I think there couldn't have been a better reassuring answer than this in the financial capital. Thank you so much for joining us. Thank you.
What we are seeing is that the financial inclusion is growing and growing and growing. And the other things which is happening is that the new things are coming in. Say, for example, this time it was the digital and it was the technology which was the theme of it. So every time we are growing, and numbers are also growing, and everybody, the partners are also growing.
Some eminent speakers and panelists, and they were able to throw ideas on some key problems in financial inclusion, the use of technologies in that space, and also the larger economic issues around financial inclusion.
That when we are aiming to become a 5 trillion economy, the importance of financial inclusion and the role which institutions like Jana play is very crucial, because if the financial inclusion dream is to be achieved, that has to come through organizations like Jana Small Finance Bank and other microfinance institutions.
I think the bank is doing amazing work in this area, and events like this reaffirm how important financial inclusion is, especially for those at the bottom of the pyramid.